Hey, welcome back to the channel. The Bank of Canada just cut its key rate for the 7th consecutive time. We're going to touch on that in this video, but we're also going to talk about pre-sales home building and how policies might be changing here in BC to encourage investment in real estate. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you want to chat with me one-on-one about your real estate situation, you can book me for a free call in the Calendly link below or on screen, and subscribe to this channel so you don't miss a future video. All right, I hope you had a wonderful week. We're going to jump right into it. The Bank of Canada cuts its key rate for the 7th consecutive time. We're now sitting at a key rate of 2.75%. So that rate has been almost cut in half in the last year. Clearly, there is uncertainty in the market, not just the real estate market, but the economy in general, stemming from the trade war or the pending trade war with the US. In terms of what the Bank of Canada said today in their press conference, number one, they cannot provide any forward guidance, and you can't blame them for that. They're basically adjusting, what their plan is moving forward almost on a day-to-day basis, because the headlines coming from the US and also from Canada when it comes to counter tariffs, etc., are changing on a day-to-day basis as well. So it's tough for anyone to keep track of what is going to happen moving forward. Now, in that, the Bank of Canada actually released a survey. They polled Canadians as well to show some of the data of how people are feeling and how businesses are feeling about the economy in general, about this tariff war. And the long and short of it is, businesses expect to invest less into their businesses, so less capital expenses are what they are planning for this year. On the consumer level, discretionary spending, consumers are saying we're going to cut back, we're going to save more money. So we're going to see this flow through the economy. Of course, it's going to affect housing as well. In terms of, housing decisions that people are making, it's very tough to make decisions when the market is uncertain, to make big life decisions, right? People are looking for stability out there. Right now, there just isn't. I think the only thing that we can assure ourselves of moving forward is that we are probably set for 4 years of, instability. Whether that actually has as great of impacts on the economy as some are expecting, no one can actually tell you what's going to happen because we don't know. We don't know what the policy is going to be tomorrow, but markets are driven by sentiment. That's both on the business side and on the consumer side. And it's definitely affecting housing. What I can tell you about, the current real estate market, yeah, we just had another rate cut. And, if realtors are out here saying this is going to create a huge influx of buyers back into the market, it's not going to happen. Ultimately what I'm finding right now, and I said I think early this year, at the end of last year, I kind of said that, this is going to be the year 2025 where a home becomes a home again. And the buyers are going to be, the investors are going to shift out of it, and the buyers are going to be people that are, upsizing, they're downsizing, they're treating a home like a home, pulling the investment out of it. The reality is that has shifted a little bit, in the sense that what I'm noticing in the market is, yes, those home buyers are still there, relatively active. I mean, sales are going to be softer this month than last year. So they are relatively active, but people are not taking on more, generally speaking. So what I mean by that is, where I'm seeing activity in the market, where I'm having a lot of my discussions with clients and transactions, are people that, for example, first-time buyers. They may be renting currently. Their landlord may have put their property on the market. So now they're kind of, up against the wall. They feel they need to, start looking for their next place. Or their existing place might not even be for sale, and they're a first-time buyer, realizing that they're spending so much money on rent that they can actually make the shift now. And so when rates change, when rates come down, this is helping that first-time buyer. And so I think first-time buyers are getting more active in the market. Myself personally, I'm seeing less people doing the upsize. So maybe moving from a condo into a townhome or from a townhome into a detached, at least in my world, where they're taking on more. I'm seeing less of that. I am still seeing a lot of downsizers because, again, you have these downsizers who may be in, detached homes and they have a lot of equity. So for them, it's a much easier move even in this type of environment. But people that are, feeling some level of uncertainty, or they don't want to bite off more than they can chew, they're stepping back. So I'm also having a lot of conversations with people that are just they want to be updated on the market. So we'll talk every 2 to 3 weeks. We'll hop on a phone call and just, give a fresh market update, what's actually happening out there. People are not in a rush unless they're getting a great deal. And so buyers, they really need to be encouraged by way of getting a good deal. They're not going to pay for an overpriced property. They're not going to throw an offer on it. Even if you're well priced for today's market, chances are you're going to see an offer that's much lower, forward looking in terms of, where might this market be, especially in the condo segment, where might this market be 6 months from now? And that's what everyone is trying to get the answer to, but no one has the answer to. Now, if we look at it from a long-term horizon, and here's where we're going to talk about pre-sales and some of the pretty big changes that may be on the horizon, not just nationally, but also provincially. Bob Rennie, he's the head of Rennie Marketing, and they've been a real estate brokerage for decades now. Bob Rennie, the condo king. Really, the company cut its teeth in the pre-sale segment, if you haven't heard of Rennie. And so he was talking at an event, and he kind of dropped out that, he's been working with new liberal leader Mark Carney in trying to create a pre-sale program for foreign buyers, where foreign buyers would purchase pre-sale units that they would have to rent out for 25 years with low-cost financing by CMHC. Now, a few videos ago, I said, look, do not be surprised if we see some alterations or changes with the foreign buyer ban. Is now the time to get rid of the foreign buyer ban, because investment into pre-sale has been so low. So clearly, you have Bob Rennie thinking of new ways to get that pre-sale market stimulated. Now, I don't want to put the cart ahead of the horse, because this could be speculation. Mark Carney hasn't said anything about it. The reality is, I support getting more investment into the pre-sale market, but I don't support doing it in the sense of offering low-cost financing to foreign buyers at the expense of taxpayers or purchasers on this side, because anytime you subsidize financing on one end, it's going to hurt financing on another end. Maybe that's a first-time buyer or whoever it might be. And I don't think we should be subsidizing foreigners when it comes to financing versus our locals here who wanted to get into the housing market. But it was an interesting thing to hear that there's definitely discussions happening, of course, between some of these larger names in real estate and developers that are pre-sale developers that are feeling it right now and struggling to make the required amount of sales. A couple of videos ago, we talked about policy changes, how now for projects over 100 units, a developer will now have 18 months to sell their minimum quantity of units to get their financing, where it used to be 12 months because they just couldn't get it done in 12 months, and it didn't make sense for them to launch a project. And so you saw so many more developers saying, we can't launch into this environment, spend a ton of money, and not hit our minimum because we just wasted all this money, and then we're going to have to do it again. So that got stretched. So you know that it's on the radar that we need to do something about pre-sales, because as it stands right now, if you've been watching my channel for a bit, we talk a lot about condo inventory and how there's so much of it in the market today. And the reality is 4 or 5 years from now, we are not going to be having this same discussion. We are not going to be having this level of inventory, oversupplied inventory in the market, just based on how we are building today, right? So whatever shovels are in the ground today, that's going to amount to inventory in the next 3 to 5 years. That is greatly reduced. Housing starts are way down. So this inventory oversupply, it's a today thing. It's not a tomorrow thing. And I don't mean tomorrow as in literally tomorrow. I mean down the road. Once this inventory gets eaten up at the rate that we're going, pre-sales are just not getting constructed. And I'll give you an example. I was looking at a pre-sale on behalf of a client, and we're looking at pricing of pre-sale versus resale, Burnaby neighborhood, and the pre-sale, they're asking prices of $1,300 a square foot, completes in 2028, end of 2028. So there's a 3 or 4 year runway there. But they're asking $1,300 a square foot. You can get similar product right now, resale market, $1,100 a square foot. Is absolutely a huge premium to pay for that pre-sale. And it's not because the developer is trying to gouge the client. They're making, a little bit of a margin, enough margin to make it worth the risk. But even at those levels, the discrepancy between what you can get in resale or pre-sale is so wide. So I can't go to this client and suggest they move forward with this pre-sale, which in fact they put in front of me and said, is this something I should move forward on? I said, look, the price is just too high compared to resale. I don't see the value there. And so you see this gap that's building between the pre-sale side and the resale side. And really, ultimately, what's going to happen is once counter tariffs are in place, the cost of building is going to go up, and these prices are going to have to go up. And if they can't be absorbed by the Canadian market, by our market here, they're not going to get built. And so this is on, the national level, national leaders and provincial leaders, which we're going to talk about in a sec. But this is the next future crisis, is that these units are not going to get built. The money's not coming from Canada to invest in these pre-sales. It's going to cause a major problem a few years from now. So I mentioned how this is not just on the national scale, but also provincially. Things might be changing. Premier David Eby was at a real estate conference in Victoria, and he was actually talking about promoting investment in real estate and protecting landlords. Now, I don't know about you, but I didn't have it on my bingo card for 2025 that the BC NDP Premier would be at a real estate event getting cheered, talking about investment in real estate. And he specifically was talking about how he wants to have further supports for landlords, how he wants to look at potentially having a program where a mom and pop investor could get involved in a purpose-built rental, not have to worry about management. He said, have professional management in place. So when the BC NDP is starting to change their tune on investment in housing, and they're moving in a promoting aspect, that should tell you exactly how big of a problem this is going to be in the future. When the NDP is pro-housing investment, and it's been a bit of a staged, progression, I would say. It started with the government talking poorly on investors. They use that word investors a lot, and I'm sure PR came to them and said, look, we got to stop beating up on the investors. We need them. Let's change that word to speculators. And so then it became, okay, let's go after the speculators. And don't forget, we have the anti-flipping tax that's in place. We have all the Airbnb changes. So to hear that the provincial government is now promoting investment in housing, how is that going to look? And how is it going to work against their own policies, right? How's it going to work? So this is probably not going to be some sort of program where individuals can buy units at perhaps subsidized financing if they're going to rent it out. Because that program I mentioned that, Mark Carney may or may not be discussing right now, maybe that makes more sense to offer to locals. But, at the same time, I think it takes away the ability for a lot of people to own real estate. It's turning more of the market into that rental market. So it'll be interesting to see just to what degree is the provincial government going to help encourage and incite residential housing investment against something that they've been so much against. And so now I think they are seeing the light. Clearly there are conversations happening, and the scope of what's happening on this pre-sale, the scale of it, the pre-sale issue that we have, it's large when the provincial government is thinking to make changes. And so that's why I think, don't be surprised if we see some adjustments to the foreign buyer ban. Perhaps it gets lifted for pre-sales for all except one country who still can't buy real estate here. I'm just spitballing, but I do think that we need to see some changes, and we are going to see some changes. The reality is we've relied on a relationship with the US for too long. We haven't invested money in business and promoting business within our own borders. And, sadly, the only thing Canada knows how to do, a couple things, is to ignite the real estate market and to open the borders for immigration. And that's another thing I've talked about on this channel, is all of these immigration changes they're talking about, they're not going to be long lasting. They're going to be short lived. Already they're shoveling in thousands of construction workers. They're fast tracking them into the country. They're now focusing from a PR perspective, immigration perspective, on high skilled workers. We're going to see more of them enter the country or be enticed to enter the country. In fact, they're now targeting doctors from the US to try and bring them into the country. So it's a human capital war a little bit as well, because we need that to grow the economy. We bring in these high skilled, high earning immigrants into the country, and they will spend, and they'll keep the machine going, because someone is going to have to support how high house prices are going to go on new construction, just because the costs are going to go up exponentially. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button. What that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content, subscribe to this channel so you don't miss a future video. And lastly, again, if you're in the Lower Mainland or the Fraser Valley, you want to chat with me about your real estate situation, you can book me for a free call, or you can just give me a call. Send me a text, shoot me an email, whatever is easiest for you. I'd love to chat with you, but I want to thank you for watching this week's video, and I look forward to seeing you next week.